And hello, everyone. It's really great to be here. The industry is at somewhat of a crossroad at the beginning of 2021, when you consider the fundamental changes that took effect in the market in the last year, and that's going to affect how we operate moving forward. Some of these changes were a result of COVID-19 and the pandemic, and other developments were brewing even before the pandemic. But what we want to assess, and what I'm going to spend hopefully about 10 minutes discussing with you, is these changes and the impact that they have on the pipeline. How does it affect the pipeline? Consider the mining, manufacturing, wholesale, and retail sectors, and how each is relating to the other in light of the changes that are taking place. And so I've identified four factors. I think there are a lot more, but I think these are the core issues that we're dealing with in terms of the pipeline that are influencing the pipeline in 2021 and moving and beyond. We're seeing a drive towards greater efficiency, a shift in inventory in terms of who holds the inventory and who bears the inventory risk. There's an emphasis on beneficiation being the added value that African countries can bring to their diamond industry. And then finally, customization of supply. And I'm going to spend a little time on each of these points in my little presentation here. So firstly, the drive towards greater efficiency, and it brings up a number of questions. Firstly, how much rough do we need to satisfy end consumer demand? And that's really the rough market's big challenge. Furthermore, we ask ourselves, how quickly and seamlessly can we move the diamond along the distribution chain? And that's changed significantly, I think, in the last number of years, and particularly in the last year of the pandemic. It's been a challenge to move goods around the globe, but it's also highlighted how we can do so more efficiently. But the big change is the need for inventory at the retail level, and it brings the question. The simple calculation is, if we have a rise in consumer demand, that should translate to a need for more diamonds. But considering our past, it's not necessarily the case. And considering our past and where we're going towards, it's not necessarily the case in how the market is developing, because the age of retail inventory excesses has really ended in 2018. Before then, the jewelers would be happy to buy bulk inventory and put it in their safes and hold it in their stores until the goods get sold. But they learned a lesson in the financial crisis that too much inventory or dead inventory brings a lot of risk. So jewelers can reduce risk by owning less inventory, and they learned that lesson also to some extent last year. I mean, how do they own less inventory? How do they offer goods to the consumer but hold less inventory in their stores? And firstly, we've seen a trend in the last decade that jewelers are taking more goods on memo. Another way that they can do that is by demanding a faster turnaround from their suppliers, that they can call up a supplier and say, I need a 1 carat HVS2 diamond within 3 days. Can you supply it? Do you have it? And that shifts that demand towards the supplier. And then finally, and probably most significantly, is the development of e-commerce. That e-commerce allows retailers to really offer a lot more product without holding it in their stores. If you think about the internet, it really is this massive centralized display cabinet, and it enables retailers to tap into their suppliers' inventory at any time and in any place, not necessarily holding it in their store. And so Where does that leave our the midstream, the manufacturer and the dealer? On the one hand, polished suppliers need inventory to effectively service their clients, the jeweler. On the other hand, too much polished inventory in the market has a negative impact. As we saw in the last crisis, before the pandemic, there was an oversupply of diamonds that had a negative impact on the market. And so manufacturers and dealers are approaching this, or the only tool that they have at their disposal is to bring about greater efficiency in their operations. And technology is playing a big role in that. Technology is enabling manufacturers and dealers to understand their customers' needs, and when they go into the rough market, they then have greater insight into their rough purchases, what rough purchases they need. There's also technology is also driving a reduction in turnaround times in manufacturing, and then we look at the grading space. That technology such as AI, artificial intelligence, and machine learning is improving grading turnaround times and also consistency, which is a hot topic today. And so that's what we're expecting from the manufacturing sector in particular, that this embracement of technology. And the manufacturing sector has been very tech savvy actually in the last decade or so. But at the same time, those inventory tensions still remain in terms of who's holding the inventory. And that midstream still needs the inventory to service their clients. When we look at the last decade of rough production, we saw that in 2008 global production fell as the mining sector tried to align itself with that lower inventory that the retail sector was holding, and that lower level held true until 2017, but new mines came on stream. In 2017, we saw the spike in rough production, and that led to an oversupply and a bottleneck of supply really in the midstream, because all that rough went to the manufacturers. And obviously in 2020, there was a reduction in production, but the mining companies managed to actually sell about as much as they produced in 2020, and that surprised us. We thought there was going to be an increase, a buildup of inventory at the mining level in 2020, and that didn't happen, largely because there was really a big recovery in demand in the fourth quarter. That Alrosa and De Beers, as two of the most important examples, really saw a spike in sales in the fourth quarter. And we see this, that the last time we saw such an increase was at the beginning of 2017. And that was followed by that oversupply crisis that we experienced until the pandemic crisis. And we see similar patterns before that increase, that there was a lull in the quarters before that spike in 2017, not to the same extent as we saw during the pandemic, obviously, but it's a similar pattern. And so that begs the question: is there too much rough coming to the market at the moment? And I would argue that if we see another quarter of rough sales to this extent, then we should really be worried about that, about too much polish entering the market and having an impact on the midstream again. The third factor that we mentioned was the emphasis on beneficiation. As I said, beneficiation is the program really of African governments to add value to their mining operations. By introducing manufacturing, dealer markets, jewelry manufacturing as well. And this year, De Beers is negotiating a new deal with a new supply and marketing deal that it renews every 10 years with the Botswana government. Botswana accounts for about 2/3 of De Beers production. And one of the things that will be in that deal is that the government will want De Beers to ensure that more product remains in Botswana to add value. And De Beers has already said that they're going to shift more rough to be polished by Botswana-based manufacturers, and we're seeing that already. And so, and as Martin mentioned, that affects the distribution or the route that the diamond takes in its journey to the end consumer. That instead of going to Dubai, Antwerp, before it goes to India to be manufactured and then distributed to the United States or Hong Kong and China, Gaborone, the diamond will then be processed in Gaborone and sent directly to the US and other consumer markets. And so Gaborone not only is emerging as a rough trading hub, but also as a polished distribution center. And finally, we're really seeing a customization of supply. On the rough level, we're seeing a number of mining companies and initiatives in the rough market to enable manufacturers to buy rough that suits their polished needs. The most glaring example and innovative example, I think, is from Lucara Diamond Corp, which has its Clara platform that lets buyers source rough by putting in their polished specifications, and the platform will match the rough accordingly. We also saw during the pandemic that there was an increased digitization of rough tenders, and that helps companies, manufacturers, customize their purchases. And then finally, we've seen an announcement from De Beers that they're going to categorize their site holder supply. So they're dividing their site holders into manufacturers, dealers, and retailers, and providing a bespoke supply according to their needs, according to the retailer's needs, according to the dealer, according to the manufacturer. And there's a lot to say about that if we had more time, whether good or not for the market. But the idea is that the rough market is becoming more bespoke, more customized. Also within the customization headline is the trend towards traceability and source verification, and that really is it has gained momentum in the last year or two. And given the trends that I think Sonia and Elle and Martin will speak about later, we really are going to see an acceleration of these efforts in the coming year and beyond. We see that Tiffany has pledged to disclose the mine of origin of all its goods above 18 pointers by a certain date. And we're seeing these initiatives within the service providers, the GI Origin Report, Sarin's Diamond Journey Report, the Tracer Initiative initiated by De Beers. Everledger is working with a number of manufacturers and retailers to showcase the journey and to really be able to show to the consumer that they can trust where that diamond comes from. And that feeds into the drive towards more efficiency in the market. It may lead to a segmentation of the market, because some will be able to do it and some won't be able to plug into these programs. But ultimately, it helps us understand that initial question of how much rough and ultimately how much polish do we need to satisfy end consumer demand.